What's up, everybody, and welcome back to another data review. Today in this video we are going to be breaking down the month of November. We're going to be breaking down our edge. You guys know how important it is to have a systematic, repeatable approach. So today in this video I want to once again break down our approach and really solidify and just beat into your brain the data. What is the market telling you? Those who don't reflect tend to regret, right? If you're not reflecting on your trades, on your edge, on your strategy, you are going to regret your results. You're going to regret the outcome. I did it for years. Do not do what I used to do. Do not be the trader that just shows up to the market on a whim, just hits buy when he thinks he should, right? Have a very simple yet effective approach that you've done the back testing on, that you could build the confidence in, right, and put the reps in, right? So today we're going to break down the month of November. The win ratio has increased by 13%. We went from 72% for 2 months in a row. Now we're up to 85%, right? So you'll see over here, and anybody that wants access to these high-level summaries, to these data reviews, right? Click the link below, go on my website, punch your email in, and I will send you monthly high-level summaries on the edge, on the strategy, things that I've noticed, right? Once again, really solidifying and beating that information into your brain so that you can become a way more effective and systematic day trader, right? So you can see over here, HPT cross, month tested, November, win ratio 85%. Required specifications, right? Every edge needs a very strict approach, and these are our guidelines, right? This is what constitutes our edge, right? We do not make a trade unless we see these requirements, right? It's very simple. And it's one of the hardest things to do as a day trader is to be patient, build the system, and execute the system. But once you can understand the importance of it, it becomes much easier, right? This is the sort of logic that helps you refrain from making bad decisions in the market, right? This is how you develop that mindset that it takes to build the proper habits based on the proper skill set, right? So required specifications, we're trading off a critical level, right? This is one of the 4 pit numbers, the previous day high, low, open, close. Moving average cross, right? The 5 and the 21 EMA. In the entry criteria, we need a red bar ignored or a green bar ignored. This is what is, once again, one of the most important parts of this strategy is the entry criteria, right? The specific time frame, all these trades happen before noon, and the required price movement is at least $1 in the appropriate direction. So you're going to see over here, it highlights how many losers we had. We had 3 out of 20. So we took 20 trades in the month of November, and that met these requirements, and 3 of them did not make us money. They were not profitable, and we're going to break them down, right? So notes and observations. This was a very big one for me. Trading in the direction of the 1 hour 9 DEMA increased the win ratio by 13%, right? So one of the main differences between last month's results and this month's results is I was trading in the direction of the 1 hour 9, right? So I was following trend for the most part on the 1 hour time frame, right? So that's the thing. There's tons of examples in here that we're going to break down, right? So here's an example of it right here. Open print, price falls below it. We come up, we retest it, we sell through. Green bar ignored. Our entry would be once we blew the bottom of that green bar, and our stop loss goes above it. And then we follow trend down to the appropriate target, right? So previous data, right? So we've been doing this for 3 months, September, October, and now November. You're going to see here, September, 72%. We took 18 trades, 5 were losses. October, the exact same results. 18 trades, 5 were losses. And then the month of November, we took 20 trades, and the number of losses were 3, right? That's actually an error. All right, so November 1st, right here, 2024, beautiful example. We get the moving average cross, right? Price pops up. We get the beautiful red bar. It's ignored. We go long right here, right? So even though we're very far away from the open, we still take the market long. This is still our edge. And we get a beautiful price. We get a beautiful move up here to the upside. And one thing I want to point out here is that notice the trend. right? So this is a very common topic in these reviews, is the moving average, the trend. Are we extended from it, right? Is it healthy? Is it unhealthy? It's a very healthy trend. Price is hugging the 9 DEMA on the 5-minute time frame. These are trends I like to get into, right? And even though we closed below it on this candle, the next candle we rifled above it, and then that becomes our stop loss. And it also becomes a very important critical level, right? You can see here I have it highlighted. Look what happened the next time price came into this level, right? We got a very strong pop, right? So once again, the people that went short here are now stopping out of their positions here, adding buying pressure to the upside, right? So that was a very cool observation right there. All right, 11-2. Once again, we're gonna focus a little bit more on the charts on the left. We have open print, right? Open print established. We rifle above it. You can see we get a red bar right here that was ignored. That bar was just a little too large. I didn't want to put my stop loss below it, so we got another one. Once again, that's one of the most effective things about this strategy, is even when you miss your initial trade or setup, you can identify another entry, right? I'm not telling you to hesitate and miss out on most of your entries, but on the flip side, even if you do not like, or it's hard to identify risk on the previous red bar, you can wait for the next red bar to be ignored in a bullish scenario, right? So you can see we got very good opportunity right there. And then the same day we played off the same level, right? So we were actually able to capitalize on this edge twice in this day, right? And you can see this trade was an absolute banger. Next, coming right here into previous day high, and then price pops above previous day high. Once again, very healthy trend. Red bar ignored, boom, right? Here's it on the 2-minute. I'm actually gonna go to this day right here. What is this, 11-5? Let's see, grab this guy right here. 11-5. This day was awesome because you could see previous day high popped up to around, what was it, 572.52, right? So literally right here, previous day high was right above this red candle. Once again, look at how price is approaching the supply zone. And that's a very important thing to talk about, right? So if I pull previous day high right here and make it a zone, right? So the old Josh used to look at this and be like, oh man, that's a hefty resistance, right? That's supply, right? Sellers are probably going to show up there. And what would happen is now I'm assuming or predicting in my mind that sellers are going to show up at this area of resistance, right? Because we're taught, especially in our beginner years as day traders, that resistance usually has sellers there, or supply means go short. There really couldn't be anything further from the truth. Trading's never about predicting sellers are going to be in supply or buyers are going to be in demand. Trading's all about identifying objectively how price is reacting to these levels. So just because it's an area of resistance doesn't necessarily mean that sellers are going to be there. On the flip side of the coin, in a very bullish scenario, what happens if buyers push price through this level? Usually you get a very large pop to the upside, and that's exactly what happened. So the next time price is approaching a supply zone, I want you to ask yourself, what color is the EMA cloud? Is it green? Are we above the 50 EMA? Is the red bar being ignored? And that's exactly what happened here. You can see the red bar was literally ignored, and then where we went long was literally once we popped above it. See, referencing the 2-minute here, we get the small red bar that's ignored, and we take the market long. Our stop's below that, right? So moral of this trade, some key takeaways, is don't assume sellers are going to defend an area of supply or resistance. On the flip side, ask yourself, how is price reacting to this level? What does price look like? What does the moving averages look like? And are there any bars being ignored? Is there any red bar being ignored? And if this was a demand zone, we'd be looking for, is there any green bars being ignored, right? So you gotta objectively ask yourself, what's price doing? And is it giving me opportunity? One of my biggest issues for the longest time was predicting. You guys know I'm constantly talking about it. Predicting price action will cost you your dream. It will cost you your profits. It will cost you results. It will make everybody think that you're an idiot and you should have never became a day trader. Don't do what I did. That's what I did. I'd be like, oh, it's area of supply. I'm gonna sell the highs and buy the bottoms, right? No, you cannot predict the high. You think you can because it may have worked yesterday, but it does not work on a consistent basis. It is not a effective approach in the market, right? So do not do it. I did it for a very long time. It does not work. Instead, ask yourself, how is price reacting to the zone? Right? So, really good trade there. 11.6. 11.6 is actually a good one. Let's talk about 11.6 here. So 11.6, right? We have open print is established up here. All right, this is actually a really cool one. Open print's established up here. We get the moving average cross in pre-market though, so that kept me from going short. I'm not saying that that's a requirement, right? If you were able to identify sellers here and you had a clear downside target, which we did here at, what is that? 586.30, right? So there was a clear downside target. But look at here, open print, price falls below the 50. We get a green bar ignored. That would be a beautiful short play, stop above open print. I missed that setup. So once again, I remained patient and I allowed price to come back into the area of interest, and then price then fell below and we got a beautiful entry on the 2-minute targeting the downside, right? So once again, just because you're missing the first setup, it's okay. Learn to objectively, once again, play that critical level, right? If price comes back to it, who's going to be in control? Where are my moving averages at, right? So once again, really good example. And notice here, we're below the 1 hour blue line, right? The 1 hour 9 DEMA, that's the blue line, we're below it. So once again, I was playing shorts. That has been an effective tool this month. Beautiful, very beautiful long play here. What day was this? This was 11.8. You can see here, open print, established right here. We get this is 11.7, wrong day, 11.7. Oh yeah, there was no moving average cross in the morning, so we did not take the trade. 11.7, right? We get this beautiful move right here. Open print is established right here. We get this level here off pre-market. Price rallies up. Once again, ask yourself, how does the trend look? What does the moving average look like? Are you extended from price? Are you hugging price, right? Great example here. We're hugging price. Take the market long on this candle. Stop goes below this candle. Caught a beautiful move to the upside, right? This is a very good month. Oh, here we go. Here's a loss. So 11.11. Let's talk about 11.11. Oh, yes, 11.11. I took a long play. That's where I went wrong. So if you come to 11.11, you'll notice a few things here. And the first is that we were never above open print. So I really had no, I don't want to say reason, but the edge was not present, okay? So going back to what we were talking about in the beginning of this video, you are only as good as your ability to identify and execute your edge. Your edge is only as good as your ability to only execute it. This is a very important topic, right? Like, if you have an edge that you've back tested, that you've collected data on, and you fail to identify it, the result of that is a losing trade, right? If you have an edge that has, doesn't matter, 90% win ratio, but you can't only trade it. Your results are going to not reflect the results of the edge, right? Like we always talk about Newton's third law. Every action has an equal and opposite reaction, right? So in trading, in the trading universe, your action, your initial action is going to be your ability to execute your edge. Your equal and opposite reaction is going to be your results. That's your byproduct. So if you put in all the work and develop an edge, develop a strategy, and you do the back testing on it, and you're like, dude, this has a 90% win ratio, but you fail to execute it, that is going to show up. The byproduct of that is going to be inconsistent results, depending on how often you do it, right? This was one day. Unfortunately, you're going to see here, I was able to identify that I had no business taking this trade for a few reasons. One is we're not above open print. We never got above open print, so sellers were always in control, right? Until buyers take open print, my objective chart reading skills, right, are telling me that sellers are in control. So my first mistake here was longing the market below open print. My second mistake is I was longing the market when price was below the 9 DEMA on the 1 hour, right? So once again, going back to that principle of trading with the 1 hour moving average, right? That's going to serve you. And what it is it just helps you. It's like, I don't want to say training wheels, but it's like there's walls set up next to you, keeping you from trading in or going in the wrong direction, right? Trading with that moving average is highly effective. It's very simple, and it keeps you on the right side of the market. So that was, once again, we failed to trade in the direction of 1 hour 9, assuming buyers would be able to push through the DEMA. Instead, this was a perfect spot for sellers to defend trend, right? So let's go back to a topic I used to talk about called the 50-50 perspective, right? So if buyers aren't in control, are sellers? Yes. Yes, the answer to that question is yes, 88% of the time, right? So 88% of the time, if you're trading in the wrong direction, 88% of the time, if you enter a trade and you lose money, that means you need to flip positions. Not immediately, right? It doesn't mean get out of your longs and go short immediately, right? Because you still have to determine risk. But if your trade plan has no follow through, it's probably because you read the market wrong, and it needs to go in the other direction, right? That's not the case all the time, so don't put in the comments, bro, Josh, what do you mean that's not what happened to me yesterday. That's not what I'm saying. What I'm saying is, in this scenario, when you are trading off critical levels, if you are trading in the wrong direction, it usually means that the opposing force is taking control, right? So we ended up going short right here on this candle. Ooh. Right? Green bar ignored right here. Sellers come in, wipe it out. I'm in the market short. My stop above this level. And we caught a glorious trade, right? And that would be the next trade right here. So, see, beautiful, done. Moral of the story, trade in the direction of the 1 hour 9, right? So now let's go to, what day is this? 11/12. This day was amazing. Very awesome trade here. This is all the criteria right here. This was beautiful. We were live on Discord this day, I believe, too. So this was great. Open print established right here, right? Let's just do a quick walkthrough, right? Open print is right here at 5987, right? So I'm just going to label that right there, 5987. Price is above the open, right? You can see here, we're above the 1 hour 9. And we're kind of ripping into this end of day level, which is 59871. And then price falls below open print and end of day, right? Which was the same this day. Open print and end of day were the same exact price. Once again, that's not coincidence, right? That's because there was that much liquidity there, right? So once again, the pin numbers, the critical levels have significance because of one reason: the abnormal amounts of volume there, right? There's higher than normal amounts of volume at the pin numbers. So when end of day and open print are the exact same price, that's telling you something, right? That means they needed that much more liquidity at that specific price. So that price now becomes your microphone, right? Our large money's microphone. They're going to scream, communicate to you, hey, we are bearish today, and we're going to tell you this by falling below this level, coming into it, letting the moving averages cross, and then giving you a glorious green bar that's ignored. We're in the market short here, and our stop goes right here, right? So once again, utilizing that green bar that's ignored, right? That's our zone, our area of interest. We take the market short, follow the moving averages down. Beautiful trade. All right, let me pick up here. I'm going a little slow. Let's see. Really good month this month. Very good month. Oh, this was a great trade. Let's do this one, 11.19. $11.19, baby. Look at this. Look at this one. Open print, established right here. Make our little box. Price coming into the 50, right? We can't close below the open. Look at this. Bam, bam, bam. Can't close below the open. We rifle above the 50. We get the red bar. It was ignored. That's a long play stop below it. I missed this trade. This trade was very hard to get into. It happened very quickly. But look at how beautiful it is. Bam. Beauteous. Beautiful trade. I mean, all these guys, it's just, you know, and you'll notice it is, yes, a very strict approach, but we actually, we adapt in all price action, right? Like, it's never going to be the exact same trade every day. It's going to be a bit different, but it's going to have the same fundamental principles involved. It's going to be off the critical level. It's going to have the moving average cross. It's going to have the red bar, green bar entry, right? And like, if you can learn to use those fundamentals in every single trade, then you're going to have a fantastic edge. It's going to give you so much more confidence in the market. 11.21. Right? Okay. Let's see here. Oh yeah, losing trade. Let's go over that one. 11.21. Could I have done anything differently? No. Let's see here. Is it 11.22? Screwed up the date. So this was another day that we were live on Discord. There was a losing trade this day. And you'll see here, it was just hard to identify an entry. We were coming into previous day high right here, which is this zone. And we just couldn't get that strength above it that I was looking for until later in the day. Or no, we never got it. And, you know, so price rallies above, comes down, tags the open print. I take the market long up here, and I get stopped out of my trade. Like, okay, so be it, right? 85% win ratio on this strategy. You're going to have losses. We are in the most unpredictable, unstructured environment in the world trying to manage positions. So to properly manage your positions, you must position yourself for loss. You must put yourself in a predetermined state where you know exactly where price needs to go for you to stay in the trade and to get out of the trade. You need to do this. You need to be very good at doing this. If you can't do this, you're not going to be successful in this game. You need to position yourself. You need to go through data like we're doing and go, okay, we have a strategy that has an 85% win ratio. What happens the 3 trades that don't go my way? Do I hold and hope? Do I cut the loss? If I do cut the loss, where do I cut the loss? You should be approaching every single trade with this understood. And also, you should be approaching every trade understanding where you need to stay in the trade as well, right? Where does price need to go to tell you, hey, I'm not done yet? What does the trend need to look like for the price to tell you, hey, I actually have another $1 or $2 left in me, so don't sell me yet, right? Like, you need to be assessing all price action at all times, understanding, hey, this is a good trend, this is a bad trend, this is where I get out, this is where I stay in. Yeah, it was a really good trade, really good month. You guys could see here, it was phenomenal. This one, this was our last loser, 11-26. Once again, there's just no follow through, right? Open print, we fall below it, we get a fall below the 50, green bar, ignored, short, stop above it, just no follow through. Once again, I would not take that trade. That's a great setup, but you just need to position yourself for exiting the trade when it goes against you. But yeah, guys, this was a phenomenal month. It was a very good month. Look at here, 11.27. This is such a good trade. So good. Just price falls below the open, comes up, retests it. Green bar ignored, in the market short, stop loss. Just a beauty. Straight beauty. And this was yesterday's trade. Open print established. We come up, cross the moving averages. We get a red bar. It's been ignored. In the market short. Stop below it. That's it. Right? So, guys, this was the month of November. Once again, we have an 85% win ratio. And if you guys take anything from me, from my YouTube channel, or from trading at all, let it be, you are only as good as your system and your ability to execute your system. I took one trade this month where I rushed my strategy, and the byproduct of that was failure. Even if I made money on that trade, which I'm glad I didn't, right? It needs to be addressed. Don't be the trader that just puts on trades. Oh, I'm green today, I'm walking away. That you're doing yourself a disservice. When you make money without having a system, you're programming your mind that you don't need a system. And the trader without a system is not consistent. I don't care who you are or what you say, right? So build that system and build your ability to execute it, and then execute it over and over, and then review the results, and then watch everything start to change, right? So I hope you guys enjoyed this video. Make sure you like it, save it, share it, and more importantly, click the links below to join the team. And if you want these reports sent to you, punch your email into my website. I will send them to you monthly.